Hello and welcome to FountainFX on Friday the 29th of May 2015. This week ahead is going to see a lot of data coming out on the euro, the pound and the US dollar. The most critical day in the traders month is Friday. It's non-farm payroll day, or non-farm employment change as they call it. On Wednesday though, prior to that, we're going to be seeing the European minimum bid rate information will come out. It's forecasted to remain the same. No guarantee. Previously they forecast it to remain the same and they dropped it and they changed it by more than what was expected, and that was where we saw the crash or the start of the demise of the euro last year. We've also got US dollar trade balance and employment information out on that Wednesday. So Wednesday is going to be very, very key in terms of data and information. Then we go down to Thursday for the pound. We've got their bank rate coming out. Obviously, if you look at that, it's 10 times the amount of the euro, showing that the pound is a bit stronger than the European counterparts in terms of currency. But a lot of unemployment information coming out for the US dollar and also some Canadian dollar information. Then we go on to Friday. Friday, all important non-farm employment change data and employment rate. So we need to be looking at that figure very, very keenly. But if you look at the American employment rate, it's at 5.4%. We're looking at literally 9 months ago, we were talking 6.5 to 7%. So the American unemployment rate has seriously declined in the last year. Although, you know, there's still the scaremongers out there that are speculating the American economy is about to explode and it's all meant to, you know, go down the pan very rapidly. But we can only take it when we see it and not when we speculate about it. So let's take a look at the charts and see what opportunities may offer us this week. So on the two largest, the two main pairs that people trade, we're going to look at the euro, US dollar and then the pound. Euro is certainly showing some strength. Obviously a lot of the quantitative easing that's coming out of the European economy. Free money tends to make things flow better, and we can see that we've had there was this area of resistance. Price finally broke through it this month, but in the last couple of weeks price has been selling off from this previous high of the 114.40 level. It's come all the way back down to the 108, and in the last 3 days of the last week it did rally a bit back to basically where price was at the start of the week. So we saw it drop off quite significantly, and potentially this bull movement, this the last 3 days of bullish movement, may see the end of this drop and we might see price start to push higher. However, we still need to be aware of this area of resistance just slightly above there at the 110.40. Okay, so that's where price is at the moment. We do need to be aware of this higher level of previous resistance. It's, you know, fairly recent level, so maybe something that we need to be aware of should price start to stall at that level. But otherwise we are very much in a bullish momentum, and see if price can surge and get somewhere back up to this 114 level. Let's take a quick look at the pound. Similarly, the pound had a nice surgence at the beginning of the month. This nice bull run was off the euphoria of the elections and supposedly the removal of any doubt or fear from a change of government, the fact that Conservatives got back in. So we saw this big momentum move up. The thing that was interesting was this big, huge move here was off the Asian market trading. So the rest of the world were very optimistic with the confirmation of the Conservatives remaining in power for the UK economy, so that was good for the rest of the world. But like we say, when you look at our areas of resistance, etc., it's come back into this previous area where price fell from, and it's certainly used that as a brick wall, and it's fallen quite a considerable amount from there, from the 158 all the way down to the just below the 153. So a good 500 pip drop in the last 2 weeks. However, Friday did see a spinning top, nice spinning top movement, so we might be getting enough indecision in the market to see a reversal. But in reality, we're looking at the critical level down here, significant level of support, the 151, before we should really start to think of price moving back up. But we do have this counter trend line moving, so we can also wait for confirmation with the break of this trend line for us to be taking any buy orders. Similarly, let's take a look at the US dollar yen, which is showing some serious strength here. The price has been very much consolidated for a long period of time, and it's finally broken above this area of resistance at the 121.66. We can see that price was very much in an uptrend prior to that, before it started to be range bound. This is from December of last year, where it finally got into this area of constraint, but price is now pushed through. So what we would be looking for from this particular currency pair is we'd be looking to see potential pullback down to back down to this area of support. So it may be a case it comes straight back down. We see it pull back down before it turns and it rallies straight back up. Okay, that may be the one option. Alternatively, what we're actually considering is that price will typically, you can see that there's a sell-off here, and then there's some indecision on this particular candlestick that formed on Friday. But we may start to see a gradual sort of pullback down here, eventually into this area of support, which was previously resistance. See it sort of stall in its fall at this level, and then finally break the trend line and start to push higher. And that's really what we'd be looking forward. And to take a buy order down here with the optimism that price will then push higher and even break this high. If we go and actually take a look at the monthly chart on this particular currency pair, we can see that price has actually broken above previous highs back here, and so there is a potential that it could get all the way up to the 134, which would be great. That would be 1,000 points trade from where it is at the moment, so wouldn't be having a problem with that, and that would be very, very nice. So let's just see what the other option is that if we're looking at the pound yen, which is showing some clear signs of strength, let's go and look at looking at the dollar yen, let's go and have a look at the pound yen, which is also up at a previous high here. It's trying to break above it, hasn't quite managed it. So if we look at a couple of options, we can run a counter trend line below. Doesn't want to play ball at the moment, so run a counter trend line. If we see a break of this trend line and price comes back down, then we're starting to see look for confirmation of a sell-off. What I would look for is I would look for price breaking below this as a neckline. So potentially what we may be seeing here is we've got a shoulder, and we've got a head, and then we may get another shoulder, and then we get a break below this neckline and a pullback and a continuation down with a look to sell at the pullback here. Or alternatively, if this area of resistance isn't sustained, you can see it's trying to break above it, but it's almost like it's just doing fake breakouts. But if it does eventually break through, then we want to see it push higher, pull back, and then continue high again. Okay, so they're the two options that we've got there on the pound. The dollar yen seems like the more obvious currency pair that's showing strength and weakness against each other. So they would be the ones for taking long. This is a potential to go long if we see a break, but otherwise we would be looking to short at a very nice high in resistance. We may even see it come all the way back down to the 175. That's really it for the week. Have a fantastic week of trading. For those of you that want to join us on any of our webinars to gain more of an understanding of the markets and how to take profit consistently, we have our WhatsApp group for our live traders, and we also have our webinars, Novice to Pro and High Probability courses that you can join in and take part in. So happy trading. Visit us at fountainfx.co.za, and we hope to see you again. Bye-bye.